And it is not just Hollywood studios banking on big bucks from this summer's blockbuster movies. Theaters are as well. Investors wanting a piece of the summer action could do so with an entertainment real estate investment trust. David Bryan is the CEO of Entertainment Properties Trust, which has investments in theaters and various other entertainment complexes. Nice to have you with us, sir. Welcome to the program.
Thank you. Good to be with you.
So how do you get on track to benefit from some of the blockbusters that we're expecting this summer?
Well, you buy the property and you have a participation in the rent streams that over a certain break point that you get a piece of the action. What
are you expecting to be the big blockbusters?
Oh, the big blockbusters are really, it's been the four big ones. Potter is the only one left. They're expected to be Shrek and Spidey, and then Pirates, and then Potter. Potter's the last of the big four to come forward, but there are a lot of ones to come. There's new material like Hairspray. There's still a Bourne Identity, a Rush Hour 3. So there's a lot of good lineup. It looks like an all-star game, actually.
And it's interesting because while the last couple of years have been slow or sort of down in terms of box office receipts, we're actually seeing a pickup and an expected pickup for all of '07. Is that right?
Yeah, '07's up about 5%. Actually, '06 was pretty good, up 3 or 4%. '05 was a disappointment, but then you got to remember '04 was a very big year with a couple of bluebirds like Passion of Christ and Fahrenheit 9/11. So actually the trend overall, if you really just put a line through it, it's very much on track with what it's been for the last 10 or 15 years. That's about a 3–4% annual growth.
So how do you keep that growth going? What are the challenges for the theaters today?
Well, the challenges probably are more rumor than they are reality. The challenges are mostly about people wanting to believe for some reason with technology of home theaters and home viewing that's taking away from going out to the movies, which really it isn't. It's actually very complementary. People still want to go out a portion of the time, but really I think the main way that we really fight back against that is to move technology in the theaters, which is happening. The digital is overtaking analog as a presentation form. That's going to mean new things in terms of clarity of presentation, in terms of speed of presentation. It's going to allow Hollywood to do some different things with regard to their productions. And it's also going to mean the theaters are going to be a venue for all kinds of content other than just Hollywood films. So it's going to be an exciting place to go.
Well, you really can't say, though, that home theaters and the digital age is not taking away from the business in theaters. I mean, it has to be, right? People want to stay home if they have a better environment and a nice big TV screen to view movies. Isn't that true?
No, not at all, Maria. No more than microwave ovens took away from restaurants. The fact is, there's a certain portion of time people are going to stay home, and then home entertainment mediums are going to compete against each other. So movies on a download really compete with the networks much more than they do with going out to the movies. People want to go out of their homes for a certain portion of time, and if they get excited about movies at home, they tend actually to go to movies more when they go out. So actually it's a complementary, not a competitive situation.
All right, so let's talk about the complementary part of the business, the digital part of the business. How are you trying to capitalize on that? Are you shifting or sort of making different investments as a result of what's happening in digital?
No, I think it's just going to allow for the larger complexes, which we specialize in, actually 20 screens plus or minus. Those are going to become the more valuable venues, which they have been traditionally. People are talked about them going down in value and going down to a smaller retailing model shortly. But when you increase the amount of content that can be available, actually now the large stores become more and more valuable. You want more shelf space when more offerings become available in the market. So we're focusing still on the same end of the market we've been in. We do think there's a place possibly for a smaller retail model, a little dinner theater type thing that's emerging now back in the sixplex model. But our main focus is going to be still on the larger venues, which we think are going to be the most valuable real estate investment.
Tell me what happened with AMC movie theaters, your biggest holding there. The company was supposed to go public, scrap the IPO. What was the issue?
Well, I think the issue really was that they came out behind Cinemark. Cinemark came out into a market that right after they came out, there was a little bit of buzz about other ends of the market that caused their stock to fall a little bit into a non-performance hole. So AMC was coming, and they went on at I think they pressed to get the top end of the range. And so as AMC was out on their roadshow, people basically were reacting to not taking the top end of the range, particularly at a multiple that's really ahead of where Cinemark was being valued. And so they just decided they're going to wait until later.
David, good to have you on the program. Thanks so much. We appreciate it.
Thank you very much.
We'll see you soon. Take care.